Ultimately, the scheme was set up to ensure that the disabled people, could be brought back into workforces, could provide a healthy lifestyle. Basically, that's what the whole idea and the niche of NDIS properties was. Hello and welcome to another episode of Help Me Buy Property podcast. Today, the topic of our podcast is National Disability Insurance Scheme, commonly known as NDIS scheme. Now, everyone thinks about NDIS housing, but there are certain stereotypes around NDIS properties. There are certain ways to look at what NDIS provides to disabled housing. There are certain jargons in place like MTA, SDA, or medium-term and short-term accommodations, SIL, which is supported independent living, and SDA housing, which is specialist disability accommodation. We are going to understand all of these things. How does that comes in relation to investor getting better returns? What type of products are out there within the SDA housing? And most importantly, the pros and cons of NDIS investing. Stay tuned to the very end because we keep the best to the last, the pros and cons of NDIS properties. Thank you for listening to us. Have a wonderful day. Hello and welcome to another episode of Help Me Buy Property podcast. Today we are going to talk about National Disability Insurance Scheme, commonly known as NDIS. I have one of my wonderful friends, a brother, and a managing director to AZ Property Solutions, Irshad Siddiqui. Irsh, how are you today? Welcome on the podcast.
Hi, Moxin. Thank you so much. I'm doing great. Thank you so much for inviting. It's great to be here and discuss a few things which is more valuable for our investors, our people. We're getting lots of questions regarding this NDIS. Wanted to discuss and clear out few things which was always seems like a hidden things.
Definitely. And look, there is a lot of myths and stereotypes about NDIS properties out there. There is a love-hate relationship when it comes to NDIS properties with a lot of people. So without further delay, talk to us a bit about what is this NDIS space or NDIS scheme? Let's start there.
As you mentioned earlier, National Disability Insurance Scheme, that's commonly known as a NDIS. We need to understand NDIS is an umbrella where this scheme funds money for the participants, for those people to live the best possible life, right? NDIS supports people with disability with funding based on their individual needs. Yeah, every participant has their own individual plan and participants control the amount of support they receive. And at this stage, we have over 500 or 500,000 Australians with disability to access the service and support they need. More than 80,000 children with the development delay, ensuring they receive supports early. So this is the reason this scheme came into the effect, where people with the disability can have this facility and have this money to have the best possible life, not living into the hospital, not living into the aged care or nursing homes.
Definitely. And look, the government, has pledged the massive funding to it. I was listening to some of the government outlays and, $166 billion and $8 billion extra funding that was pledged, not over 6 months ago. So there is a lot of money that the government is pumping into this. And, there is a massive social enterprise attached to it. And so naturally, that is where, the government lens is, to provide a better living towards the disabled people. And so that makes a lot more sense.
I agree.
So talk to us a bit more about, these crazy jargons. People talk about MTA, SIL, SDA. Let's break this down for the listeners and help them understand a bit of, what are all of these things and where does housing come into play? Where does, all of these other services come into play?
Let's understand why people and investors are only talking about the SDA housing. SDA stands for Special Disability Accommodation, meaning that the people with the disability, they can accommodate there with the best possible services. Now, how it works and how many other people and industry, or I would say arm, involved to provide the services. And as you asked me earlier, let's break it down into, in a different category. So to invest in SDA, which is a special disability accommodation, it's not only just putting money and building homes. The reason of this scheme to come into the effect, so government wants to provide the best possible services to the people who are residing in hospital or they're living in, aged care and nursing home at this stage. So what they want is to fund as much as possible, and which is, as you said, $26 billion, and that's what they announced in 2016, to fund towards this disability housing scheme. So someone can come forward, build the housing which is based on the compliance and the government requirement and based on the individual disability requirement. So there are categories which we categorize in 4 different categories. So, and for every single one, there are different type of housing compliance.
Before we go into, further depth of, what does SDA housing requires or the various different categories, could you touch on a bit more into SIL or supported independent living in MTA, which is the medium-term accommodation? Let's give the users a bit of an understanding about, all of these complementary services that still exist as part of NDIS, services or NDIS scheme. People have naturally the focus on SDA and the housing because everyone talks about it. And majority of the providers are in this SDA space, but there is a lot that happens outside SDA as well. And so let's touch a bit on that too. And, give me a bit of a rundown about some of those things.
Certainly. As you mentioned, SIL stands for Supported Independent Living. And what it does actually, this is another body which provides you the support to help live as independently as possible, right? So if you have a disability, SIL can provide you with support if you are living alone or if you're living with a group or people or maybe share housing. So SIL is the one who provide all the services wherever the participants or disabled person is.
Sure.
Right? And in the same thing, there are, as you said, MTA, which is medium-term accommodation, and STA, which is short-term accommodation. What these stand for? This is, we understand in a layman, I would say, understanding, is a transitional period of accommodation.
Yeah.
So let's say for a participant who got, funding for SDA, or they are eligible to apply for the funding for the SDA. However, they need to live somewhere. Meanwhile, they get the funding approval, or meanwhile, they're getting all the system and process done. Hence why the SIL provider uses the short-term accommodation or medium-term accommodation for them.
Sure.
Right? So they have their short-term accommodation, possibly they get approval up to 14 days or maybe 30 days to live in a property. Meanwhile, all the processing happening, and then from there, they can transfer to the SDA home or wherever they need to go next. Same thing happened with the medium-term accommodation, but medium-term accommodation goes up to 90 days of contract. But again, same thing, funding for the support services will likely come out of the participants' core funding.
Yeah.
Right.
Yeah.
So they get funding for MTS separately, STS separately, and then SDS separately.
Yes. And I think this is an important point. I think a lot of people, when we are talking about funding of the government, it's funding the participants, it's not funding the house. I think there is a massive stereotype when you look at and discuss it in the industries,
You're
the
right.
government is backing the disabled people. The government is not backing an investment property or an investment decision, right? So
Correct.
It's important to understand that you are tapping into the fundings available to the disabled people. It's not so much about the funding available, that there is a big fund of, money sitting on the side and the government is paying you directly. Ultimately, the government pays the disabled person, and the disabled person's, that pool or the budget that they get every year is divided into various different parts of, independent living or supportive independent living, is the housing, short-term accommodation, medium-term accommodations, etc. In order to provide a better and a healthy life from that sort of perspective. Is that right?
Well said, Moxin. This is very important questions to raise, because what's happening with the investor out there, they're only understanding, it's the government-backed scheme. Meaning that they're sometimes understanding, the entire funding coming from the government, I don't have to pay anything. Even I don't have to, build the home. So everything will be backed up by the government and I will make a rental income. No, it doesn't work this way, right? So the funding is only for participants, for their life, to support their life, to, make it, possible and better, right? And we have to think not in a way, being an investor, even in a market, we have to think in a way that how we can support that participants while using the government fund. And that's the key point to understand. It's not about only investment and your ROI. Definitely. It's more about that funding, how can be utilized in the best possible way to provide the services that each individual requires.
Yeah. And I think it's a very important point that you're making. Ultimately, as a smart or astute investor, what you should be doing is making their life more comfortable so that your
100%.
product is always liked and, loved, right? So it's important to see from that sort of perspective. A lot of people think like an astute investor that, I'm going to, give them the basics because they're disabled people, God forbid, touch wood. And I'm going to get the best bang for the buck. Naturally, they do control a lot in this. And, from their perspective, if they're not getting the service, why should you have access to their money that they have access from the government?
Correct.
And we'll talk a lot about this in the pros and the cons side of things. And I don't want to take or go a bit deeper into this at this stage. How about we talk a bit more into the categories of the SDA housing? I think, the house design is dependent on various different categories of SDA housing, isn't it?
Correct. So basically, there are 4 categories categorized by the NDIS. First one, I would say improved livability. So improved livability are the people, they are sensory, intellectual, or cognitive impairment, meaning that the house has to be designed to enhance their livability, right? And the category second comes in the robust. They are mentally challenged people. So the house supposed to be designed to incorporate a reasonable level of physical access, plus also provided to be very resilient to reduce the likelihood reactive maintenance and decrease the risk of participants in the house or in the community. Then the third category comes to fully accessible, meaning, someone would require significant physical impairment. They need wheelchair all the time. And then high physical support. High physical support, again, of course, is a physical impairment, but also they also require the high level of support.
Sure.
So these are the 4 categories we know so far, and that's what we're building SDA Home, especially designed for this.
Could you give a bit of an example about, each of these in relation to the participants? What are we talking about? Like a high support person is someone, who needs a full-time carer, for example. Is that something of that nature? Like, just to give, the listeners and the viewers some sort of relevance into, what does these categories mean and who are the people that we are talking about?
Correct. So most of the housing design people are in this market are building are the robust or the high physical support. And the reason, because robust are mentally challenged people and they cannot share the house, they cannot share the room with other people. Hence why it always comes with a carer. So the robust, for example, if you're building 2-bedroom home, it has to be a 3-bedroom, third one supposed to be for the carer, right?
Sure.
Not necessarily 2 will be shared with the 2 different robust clients, possibly maybe only 1 robust client, but 1 carer.
Sure.
So, and same thing with the high physical. High physical, you can build 2-bedroom or 3-bedroom home, but again, it's up to them whether they want to share with other people or not.
Sure.
And it comes with the support again. So it has to be supported with the carer. Now, there are, again, depends on their level of support and the level of their disability, support changes. So for example, some people, they require maybe 2 carers at one time. Some disabled person, maybe they require only 1 carer at one time.
Sure.
So these changes, right? So when we build the property, we keep in mind that yes, we were building for participants plus 1 carer. That carer could be 24/7. It could be on and off.
Sure. Okay. And look, I mean, a lot of this definitely makes sense. Having it ironed out in relation to the categories, helps not only the housing side of things in managing and building, what needs to be built.
Yeah.
But also from a usability perspective, there is a bit more a social sense into, okay, how is this going to work in a much more systematic fashion?
Yeah.
And so you said that majority of the houses that are built right now are in the robust and
high physical
support.
Correct.
Robust and high physical support.
Correct.
Is that because that these are better paid? Are there better ROIs attached to some of these things? Is that what drives people building more of these?
Correct. You're right. So in compared to improved livability and fully accessible participants, the funding for robust and high physical support is higher.
Sure.
And that's what it's driving investors to build only these 2 categories.
Sure.
However, there is another benefit of building high physical support, because that house is fully accommodated to live for a high physical support, meaning anyone less than even high physical requirement, they can comfortably live in that property.
Sure.
So if you build a high physical support, easily you can accommodate with improved livability or fully accessible people.
Yeah.
But can it be shared with robust, as I mentioned before.
Sure.
So people are at this stage, I would say, not people, but investors are definitely driven by the ROI first. And when it comes to ROI, yes, robust and high physical support have the more rental contribution from the funding than the improvability and the fully accessible.
Sure. And again, great. Let's talk about the journey of what an investor looks like. How does the investor makes the return, and who is paying what, and what sort of gross and the net returns are we talking about? When looking at an NDIS property, and give a bit of an indication about what type of product are we talking about as well.
Correct. Before I go into that, Moxin, I would like to go back and clear a little bit more about the SIL and SDA provider.
Sure.
Because what happens, we've been talking to multiple investors. They don't know what happens at the back. They only understand, okay, can I build a property and I can get paid $100,000 a year?
Yeah.
But they don't know how they can get paid.
Yeah.
Where the money comes from, right? And how much it comes, and things like that. And who are involved at the back end. So I would like to clarify this. When you build a property, once the property finished, there are two parties involved, right? One is your SDA provider, one is your SIL provider.
Sure.
SDA provider, they are only for the provider residents with accommodation and they will collect all the rent. They fix, they maintain the property. It's very similar to what a real estate management company. That's what the SDA provider does.
Sure.
However, when it comes to SIL provider, and that SIL provider must be collaborated or working together with the SDA provider. So SIL provider brings all the support that's required for the participants living in the property. And that's where investors, they don't understand, why the two types of provider? Do I have to sign with two separate contracts with two different providers?
Sure.
No. You only deal with SDA provider. However, SDA provider go back, they will collaborate with the SIL provider, then support coordinators and then co-workers to make sure they are bringing the participants qualifying for your property, the design you build for, and then they will be collecting the money for your property.
Yeah.
Now, coming back to how they can get the money in and how much they can get, right? So your income is received in 3 separate payments. Yeah. So first comes from the reasonable rent contribution, which is approximately 25% of the recipient disability support pension plan. And then the second one comes from the accommodation payment, and the third one comes from the Commonwealth Rent Assistance. Now, these 3 categories, these 3 types all together, when combined, that's where you look at the bigger picture of your rental contribution goes to investors. So let's talk about scenario number 1. Scenario number 1 is a robust home. You build two bedroom, 2 bedroom plus 1 carer room. And 1 robust participants, sometimes it varies council to council as well. But let's say on an average, which is the good thing is that everything is available on the government website, which is dss.gov.au, right?
Sure.
Anyone can go and have a look. So if the 2 participants, 1 carer, you can get up to $42,000 yearly rental contribution from the government, and plus the RRC, which is called rent contribution, and the pension and all those things.
Sure.
Which is another $10,000 on top. So let's, for example, if you're building a robust home, which is 2 participants, 1 carer home. Now, what you're expecting as a rental is you can expect up to maximum $42,000 rental income contribution from the funding, which the participants has got funding. They got a lot more funding for that, but the other funding goes to their servicing, their living, all the other expenses.
Sure.
For the rental contribution, you can claim up to, or you can get up to $42,000.
Sure.
Plus, there another $10,000 you might collect from the RRC, which is called Reasonable Rent Contribution.
Sure.
Commonwealth Rent Assistant, and the accommodation payment. So altogether, you're looking at anywhere between 42 to, let's say, 52, approx.
Yeah.
But this is we're talking, these numbers will vary because every participant, as I mentioned earlier, comes with their own funding.
Sure.
So don't rely that if we're building a robust home, you will be getting $42,000 exact income from that one participant.
Sure.
Not necessary. Maybe the participants, based on his disability, coming with only $25,000 of
so this is
funding.
the maximum amount available to you for this particular house.
Correct.
And so your assumption in this scenario is that you're going to put 2 of the robust participants in there with a single carer in this house. And so you're looking at overall of close to about $100,000 in gross income coming back to you?
Correct. Correct.
Cool. And so what is the cost of, something like this? What would be the price of the land and, construction, etc. together?
Cool. In this market, let's say, assume anywhere to build that one, you need at least 300 square meter land. Market like this, you're not going to buy anything less than $1,000 per square meter.
Sure. So $300,000.
$300,000 for the land. Construction cost is usually higher than the normal build cost. And the reason, and that's another thing people not understanding as an investor, that why I'm paying so much, $100,000, maybe $150,000 extra than a usual home I built last year. Because of the compliance, the extra inclusions, the extra requirements, and sometimes with the participants comes with their own requirement. They need to have those things in the house before they move in.
Yes.
If those things are not included in that house, they would not come to that house.
Yeah, and so it's a very customized house in relation to, the width of the, the entrance and, how low the bench needs to be, how high the overhead counters can be, etc.
Correct. It has to be built in a way, first of all, it has to be compliant with what NDIS has given the guideline, the design guideline, floor plan guideline, and the inclusions guideline. It has to be that way, plus even more. So now, the more better in a home you build, the better possibly for you, the participants come and fall in love with the property.
Definitely.
They don't move out. They don't tend to go here and there. Once they find their place, they will live, because think about that. They've been living in a care house. They've been living in hospitals. So we are providing a home which they can feel comfortable. They invite their family to meet. They have their open place to live, and they can do whatever they want. They have their family time.
Definitely.
So keeping that in mind, the better house you build, the better chances for you to have the tenants staying in your property.
Yeah. And so it has to be safe, livable, and efficient building combined together to attract the right tenancies and long-term tenancies as well. I think we'll talk about some of these things again as part of the pros and cons, but it's important to also note and understand here that when you're talking about the participants, there is a lot that participant controls, right? From their perspective, they can choose to come in the house, they can choose to move the houses, depending on the services that you're providing. And so ultimately there is a big social cause and social enterprise attached to this. And so you can't just drop that, empathetic nature and the kind nature of, the investing that comes together with this. You can't just think truly from dollars perspective when you're thinking about NDIS properties.
Correct. I mean, you have to think in a way that, yes, we are you are the one who is going to provide the better possible services to that disabled person, because he was living in hospital before.
Yeah.
So you have to think, put your feet on that shoes, that yes, I'm going to provide the better home that he can live comfortably there.
Sure.
Right.
Sure. And so what's the damage, Irsh? What are we talking about from a construction side of things? Close to about $400,000-$500,000 for potentially a 3-bedroom, 2-bathroom house.
I would say, instead of putting a dollar value, I would say per square. So that will, it depends on how big the house people are building.
Sure.
It will give an idea that this is the cost going to look like. So in this market, anywhere between $22,000 per square to $25,000 per square.
Sure.
That could be your building cost if you're building with a robust or high physical.
Sure.
And that's where people are like, no, I can build on $15,000 per square. Why I'm paying 22? Because of those inclusions we just spoke about.
Sure. And so a typical size of a house of a robust living or high special needs?
Not really. Anywhere between 18 square to 24 square, 25 square.
Sure.
Is more than enough to accommodate 1 or 2 person in that property.
Sure.
Nowadays, you can build 20 square if you want a bigger room, bigger bathroom, and all those things.
Sure.
As I said, the more comfortable home you will build, the more chances for you to have the tenants forever.
Sure. So a product like this, you are talking in the realms, and I'm going to give a range, between say $650,000 to $700,000. Basically, that's what you're talking about. With a return of almost like $100,000 on a gross perspective.
In current market, I would say this has been changed. Yes, in the past, last year, when we were doing the house land packages for the NDIS SDA home, we have achieved $650,000, $680,000, under $700,000, but not anymore, because their land price has gone so up.
Sure.
Construction price has gone up. So construction price, we're talking about $420,000 to $450,000 just for the 3-bedroom home.
Wow.
And plus your $300,000 that land cost. So we nearby looking $750,000 to $800,000 mark, anywhere in that between, just to start with.
Sure.
And then if the both rooms are tenanted, then we're looking at anywhere between, $85,000 to $100,000 in between to collect the rental.
Sure. And with the carer, do you need to pay the carer, or the carer is looked after through the sale payments?
You said right. Will be looked after from the sale.
Yes.
So some people, actually, it's a good question. Some people ask me, hey, so I'm building 3-bedroom, 2 for participants, 1 for carer. Can I get payment for the carer as well, the 3rd room? I said, no, you can't. Carer is for them. It's not for you. and again, understand this. You are not building a rental property.
Yes.
You have to think you're building a carer home.
Yes.
So someone you're going to take care of. So don't think about the room by room payment. Think about a house which someone will be taking care in that. And because of that, you're getting the funding against it.
The carer is not going to come out and, give your house a clean or...
Yes, that's right.
It's definitely there for the disabled people. Okay, and so we are talking in the realms of 12 to 13% gross return. What does this return looks like when you talk from a net perspective? What are the typical fees involved in relation to coming from the gross to the net?
Okay, so once you receive the gross, what is your outgoing? And I remember one of investor I was talking to, he was from interest rate, and he asked me, so who will pay? You're not paying my mortgage? I said, no, I will not pay your mortgage. So government not paying my mortgage? I said, no, government will not pay your mortgage. And he was like, nah, then this is not a good idea. I said, okay, no worries. So let me tell you this one. It's exactly same as any investment property you are building outside in the market. So what you pay as a owner of a property is your water rate, your council rate, your interest, your insurance, and your mortgages. Exactly same thing will apply on this property. So you will be paying out as a owner whatever you pay for your any investment property out there.
Sure.
So out of the gross income what you have done, you deduct all those plus a management fee. So exactly same as any real estate agents out there. So when you have investment property, you're paying a management fee to real estate agents, 5%, 6% whatsoever. In category of SDA provider, usually in the market, they charge anywhere between 12% to 20%.
For the
it
management
depends on
fees.
every individual, right?
Yeah.
And that's what you'll be paying on top of your paying all your owner corporations and everything.
Sure. And so why is the management fee so there is a massive disparity between 12% versus 20%? Is that dependent on how much work is involved with the participant? Is that what dictates it? Or is it just different based on states or people doing more efficiently versus non-efficiently?
Every provider I have seen so far, they have organized their own way of fees structure in the contract.
Sure.
Meaning that, let's say they're charging 12.5% as a management fee.
Sure.
Then will be the admin fee. Then there will be the per participant's finding fee. Then there will be another fees, ongoing fees. So, and some provider, I have seen the contract like they only charge flat 15%, there is no further fee.
Sure.
Right? Then some providers say, okay, we'll charge 15% plus also the per participant's finder fee.
Sure.
So these are few variant in the market where the provider can put the contract out.
Sure.
And each provider provides you contract anywhere between 5 years, 10 years to 20 years.
Sure.
So this scheme is for 20 years from the federal government, and hence why all the provider, they sign the lease agreement with the investor up to 20 years, but it works like this, whether 5 plus 10 plus 10 or maybe 10 plus 10.
Yeah. But this is the lease with the SDA provider. This is not the lease with the tenant. Is that right?
Correct. So this agreement will be the lease with the SDA provider. So he will be taking care of that property until that period of time.
Yeah. Yeah. And is there any particular lease agreements with the tenant as to how long are they going to stay, some guarantees in relation to some of those things? I know I'm digressing a bit, in some of these things, and we'll come back to the cost side of things too.
I would say no, because as we know that this is not a rental property investment market, this is a care plan. So they coming in to live in the property to take care by someone, which is a sale provider or carer or the services, right? So they don't commit to live in the property forever or even 1 year. So what they commit to services. So sale provider has the commitment with that. Okay, as long as you stay in the property, we're going to provide the services to you.
Sure.
So, but if they want to move out, yes, there is a process. They will give a notice and they can move out.
Yeah.
No problem.
And that comes back to why an SDA provider and a sale provider is very, very important to the equation, right? Because the more reputational an SDA provider is, the better work an SDA provider is doing, the more quality tenants they would attract and place in your properties. I think cheap is not always great. People always tend to think that, I'm going to cut the corners and, go for the cheapest management, properties or management fees in relation to some of these things. But, I would say that because, you want to attract a quality tenant for as long as you would want the best SDA provider out there, who's providing a holistic service, who's providing and looking after the tenants. And so
Correct.
the tenants would feel a lot more obliged in, living in some of these houses, or should I say the disabled people, loving and living some of these houses.
Well said, Moxin. And this is the key point. When investor ask me, what is my risk? What is a major risk? And I say risk is that if you don't deal with a good provider, if you just, don't, look for a provider who got good reputation and they have the understanding of, and also they have the good connections with the hospitals and the participants.
Sure.
Because it's all about participants. It's all about participants.
Definitely.
And participants only come if you have the really good provider in hand, right?
Yeah.
So you go engage with the best provider in the market, and then you will be more peace of mind. You don't have much to do because you can't control anything there.
Definitely.
You just build the property and you hand over. Everything else under the provider and the sale provider and other people control.
Yes, definitely. And so and this is a silly question, and I need to be as silly as possible so that people can understand and ask these questions, because naturally, these are some of the questions that people, go through people's head.
Yeah.
Can a person who's an investor become a provider themselves? Can I just rent out my own property, similar to a normal investment property? Can I just say, no, I don't need a provider, I'm going to do full management myself? And so can I find someone within my family, within my, outreach, who I can bring in and place it as a tenant?
Oh, well said. Moxin, I'm hearing a lot these questions, not from you, but the investors as well. They ask me because some of them came to me and they say, look, their wife or their relative, they're already working in a SDA as a support coordinator or maybe support worker.
Yeah.
What if they get their SDA license and they can manage their own property while they're investing it? In NDIS regulation, there is nothing that stops you not to become a SDA provider and you cannot manage your own property. You can, because all you do is you're following the compliance, right? So as long as the compliance are fulfilled, following the system and the process, you can manage. You can be part of the management as a sale provider or SDA provider and manage your own property, as far as I know.
Yeah, and this is a very important point, because I was talking to a client a long time ago, probably like 2.5, 3 years ago now. And so their whole mindset was that they wanted to invest into NDIS property, typically because, they had their own kid who was dependent or disabled. And so they wanted that property management to sit with them so that they can provide a much more holistic and better service. And what they did was, they build, a few properties of NDIS in one compound or something. Yeah. And, while their kid was supported at the same time, they were making the returns that were redirected back to the kid as well. And so it was almost like a self-serving business that they set up, for their disabled kid. I personally love the idea. I think that was a great
This
thing
is
to
great.
do.
And people not understanding that's what government actually want. Government, imposing this system because so many, family, they're living there with their disabled kid or disabled person in their home, but their own house is not designed the way to give the comfort and living for the disabled person. So actually government asking to go build a home, we will still fund you and live with that family, but build the home which is designed and specially designed for that particular disabled person.
Yes.
So funding is there to claim. They can do that, and at the same time they can take care of that kid or the person, and they can live with them.
Definitely.
And that's what actually government wants. This is the whole idea. But people only thinking as an investment.
Definitely.
It's not only as investment.
Definitely.
As I keep saying, it's a care plan.
Yeah.
Think how can you take care of those people, whether living with them, building for them, or investing
Definitely,
with them.
especially if you have someone in your immediate family or even extended family who is disabled. I think this is one of the best ways you can actually help them. You can
Correct.
actually build a product
Correct.
that can pay itself off through the government fund
Yeah.
and can be a future, almost like a passive income coming back to these people, setting them up for retirement, right? These people need constant care. I know someone very dear and close to myself, who has a disabled kid in their family, and naturally
Correct.
this
How
is a
good is
perfect
that?
metaphor.
I mean, you feel better because you're doing something good for someone. I just say, even it's not a family member, but if you just have this thought, okay, I'm going to build a home which, I can, because I can't see there's disabled people to living in a share homes or rooming houses somewhere. No, I want to take them out from there and build a home which is comfortably they can live there.
Definitely.
Man, you're doing something good for society. You're doing something good for the community.
100%.
And that's the entire idea. Let's, even I would request through this podcast to people who are trying to and getting into the investment in the NDIS and SDA properties, think that way, that you're not only looking at the ROI, because that's fixed, that will come.
Yes.
That will come. Think about how beautiful and how best services and property you can provide and build out there in the market for them.
Definitely. And so this was all in relation to the management fees. And so the key takeaway here is, don't just go for cheap, make sure that you're going for someone reputed.
Correct.
And who is someone who is providing a lot of value in this space. What other fees here shall we talking about, when we are looking at NDIS houses or SDA housing?
Nothing else I have came across so far. No other fees involved to you as an investors apart from the management fee and your owner's fee, which is applicable to you,
Sure.
whatever the mortgage,
So this
insurance,
is more like mortgage, council fees,
Correct.
water charges,
water rates,
etc., all of those
insurance.
fees.
This is correct. This is yours, and plus the management fee. Yeah.
Sure.
Apart from that, there is a one-time fee which provider charge, as I said to you, admin fee, maybe per participant's fee.
Sure.
But that could be only one-time charge.
So it's more like a letting fees when you're thinking about a typical
very
investment.
similar, I would say. Yes.
Okay, cool.
Yeah.
Okay, cool. And so out of the 800 that we, out of the 80K that we are talking about, that we can get, if you're placing into tenancies, going back to the original example, how much are we talking about on the net basis that can be saved pre-mortgage? Because everyone's mortgage would be different. People would get different rates. What are we talking about? Just very, very roughly, so that users can get a bit of an understanding.
I would say, let's say if you're taking out approx without mortgage, I'm talking about,
Yes,
because mortgage is same. Approx, I'm talking about anywhere between $15,000 to $18,000 yearly after paying all your outgoing.
Sure.
Except mortgages. If you pay mortgage, that's the top of that.
Sure.
You're looking at anywhere between taking in approx $70,000 to $75,000 if the both rooms are tenant.
Sure. So this is,
which is net.
So calling the ranges out again. So we were looking at $85,000 to $100,000 in gross return.
Yep.
We are talking about 15 to roughly about 20, 22, 25, maybe, assuming insurance, etc., everything.
Correct.
And so the net returns that we are talking about is somewhere between $60,000 to $80,000 pre-mortgage that you can make on some of these houses.
And then that's why we say it's easy to make between 10% to 12%.
Pre-mortgage.
Net. Yes. Pre-mortgage. Yes.
And so you're beating the returns for commercial properties, definitely, because the commercial properties net returns pre-mortgage, sits somewhere around 7.5%, and so if you're delivering 10% pre-mortgage returns, that's an amazing return.
Oh yeah, this amazing return, but again, it's a case to case, individual. You have to do your own due diligence.
Of course, this is the best case scenario.
You have to think about whether you have the participants or not, because it's all about the participants.
Of course,
that's where the money is.
Of course. Yeah, I mean, you think about that. your fixed cost is not changing, right? And so you go from two participants to one participant, and all of a sudden, you are making, from say $60,000, all of a sudden you're making $20,000 because that income of one participant of $40,000 disappeared. So, and we'll talk about some of these in the pros and cons. That's a good segue, talking about the pros of SDA housing or NDIS properties. What do you think? Talk to us a bit about the real pros. Of course, high cash flow sits right at the top there. From an investor perspective.
Correct. I mean, look, apart from looking at, and that's what investors are looking for anyway, high return, right? Passive income, passive cash flow, and all those positive cash flows. High returns is there, no doubt. It depends on which dwelling we're choosing to build. The funding is there, and that's the pros that we're talking about. Funding is there, which is federal government backed funding. the socially responsible investment. So what does it mean? That yes, you feel good, and that's the best part. I was saying that you feel like, okay, I'm going to do something for the community, for that disabled community. At the same time, I am fully funded by the government. So I'll be making rental income regardless whether I buy a normal investment property in the market or I invest in NDIS. Possibly more I will be making here. But here, at least I'm doing something good as well. So as a pros, I would say, the high return, the government-backed funding, and a feel-good system in you that, yes, you're doing something great for the community. This is the best, right?
100%.
But again, everything comes with a risk. Everything comes with the cons, right? There's nothing that everything is like, cream, cherry on the cream. Not all the time.
Yes.
Right.
Yes.
Because this is a specially designed property, you understand? It's highly regulated. It's registered with NDIS provider, registered with NDIA. By the way, when I say NDIA, is National Disability Insurance Agency. So they are the other agency. They provide all the services which required by NDIS and then provider and sales, right? So it has to be registered by them. Make sure the house is fully compliant. If any compliance missing and all those things, you might regret, or you shouldn't be doing this one, right? So it has to be, it comes with a risk. Now, the major thing people are facing is the borrowing capacity, borrowing requirement from the bank, because all of the 4 major banks, they don't like NDIS as much as residential.
Yeah.
So there are third-party, lenders, they're happy to give, and they are giving. You can get up to 80-85% LVR. Actually, I had the recent case. One of my client, he got 100%. I don't know how he got it. So there are, but it comes to the risk. Yes, you have to have, you have to have the good borrowing capacity. Also, you have to have ready with any sort of a, shortfall, in a valuation shortfall.
Of course.
Right. It not necessarily every time you will face it, because what happens as soon as you are projecting an income of $100,000 on a property, or if I'm talking about high physical, you can go up to $159,000 on a property. Based on that projected income, maybe you can get the commercial valuation done. And in that case, your valuation gap will be maybe none or less.
Yeah.
Okay.
Yeah.
So that could be the tricky part to play with.
Yes.
However, but you still have to ready for that. If the valuation gap falls, then you must have equity or cash to back it up.
So this can drop to almost like 70% LVR, and you should have at least between 30 to 20 to 30% cash sitting with yourself.
I would say 20% in current market. I have that's what I have seen so far. 20% with the deposit, people are still able to make and invest, unless they're not going above $1 million mark.
20% plus the deposit, is that what you're saying?
20% plus the deposit, correct?
Sure. Okay.
Correct.
Okay. And so I think if you take a step back and think from bank's perspective, the major banks are not coming into this space is truly because they don't see this as a financial product. They don't see this as typically an investment product. If you think from a bank's perspective, I've done years and years in insurance and bank side of things. From their perspective, naturally, that there is a fiduciary duty or duty of care to the tenants who are living there, right? And so if, God forbid, interest rate goes to say 8%, 9%, 10%, and the person who has bought these properties, or a vendor in this case, or an investor, cannot hold on to these properties, the banks cannot just take over the property and sell it. They can't just kick the tenants out and, repossess.
Correct.
It does not happen in that, in that typical nature of events. And so while that risk is low, because of the high cash flow nature of the property, that risk is definitely there. And so from bank's perspective, from major banks' perspective, they're not ready to write that risk.
And also for the major banks, also think about that. When it comes to the valuation of the property, how does bank do the valuation? Because of the market statistics, right?
Of course.
What is the selling price? What was the sold price? What RPDI is telling them? Based on that, and plus your property inclusions, based on that, bank does the valuation. When it comes to NDIS property, you already paid $150,000 extra for the build. Think about that. If bank comes and say, okay, your property worth 950 because it's NDIS, and next 5 houses because next doors, they're only worth 750 because normal home. How would be the valuation would be sort of justify in that particular pocket?
Yes, from a value perspective,
will be,
house is a house, isn't it?
Yeah, everyone else will be coming in the market and saying, hey, that property sold for 950 because from the outside it looks same. Nobody knows it's NDIS.
Yes.
So statistics won't show that. So it's a major complex system for the, I think, major banks not to take into consideration as NDIS at this stage.
Yes.
But hopefully in the future, once the government has a better plan in order to give them a certainty of everything, then possibly the major bank will start.
Definitely. And so, talking and using that as a segue, from a buying and selling perspective, one of the key cons in this space is, of course, the resellability or the liquidity of an asset as well, isn't it? So, can you buy an NDIS property? I believe not, right? You have to always build an NDIS property.
Correct. So far, whoever built the NDIS property, they always build to keep it.
Yes.
They don't sell it. And the reason, as I said, because demand is super high, right? We need at least, 20,000, people to place at this stage now while we're talking. And we don't have housing system at this stage. People are building now. In Melbourne, possibly last few years, the people started, SDA housing constructions and all those things. So what I say, it will take a bit of time for you to understand, to build, and then put the participants. It's highly demanded. Supply is very less.
Yeah.
So there is always opportunity for you to keep investing at this stage. Yeah.
Now, while we talk about the demand and the supply side of things, yes, the demand is high and the supply is low. It is quite scattered, right? There are places in Queensland where the supply is crazy and the demand is very less. And so, naturally from a developer's perspective, it's in their best interest to make as many as possible because there is so much demand. And so people who are outside investors who don't know of the local areas, there is a very big risk where you end up buying in an area which is, flowed with, number of properties, or, I've heard about apartments going up these days for NDIS properties as well, right?
Correct. So
how do you control the demand and the supply in a particular state and, or a particular suburb or a particular place, so that risk of, getting the market maturity or getting an oversupply because, there is massive returns in some of these space, is quite up there.
Good question, Moxin. The good thing is that the government already applies a demand map on the government website.
Yes.
Okay. So people can go and they can check the demand in each area. They put the postcode there, the demand will come, and it will show how much the funding required in that particular area, how many participants are disabled suffering with a disability, they need homes, and all those numbers and statistics are there.
Perfect.
However, if you get in touch with the provider we're going to deal with, you're going to hand over your property to, they are the best people to tell you that what's the demand look like in the area you're building your home is.
Yeah.
And that's why when it comes to the process of investing, I tell people, you resource the land, but before you resource the land, check the demand in that particular area.
Definitely.
Which area you're going to resource the land for yourself.
Yeah.
Then you talk to your SDA provider. Say, hey, I'm going to build a home is there. What does the demand look like for you? If I give you my house, would you be able to fill that up? Do you have participants in that particular area?
Yeah.
Because you're not going to build the home based on only the map.
Sure.
And think of, someone else come in and they will fill your home.
Yeah.
Right? Rather you talk to SDA provider first and say, hey, if I'm going to build that house there, do you have participants you think in a year time or 6 months time you will be able to fill that?
Sure.
Say yes or no, and then you go ahead. Possibly in that case you won't go wrong.
Sure.
What happened in Queensland, because it's flooded, it's overloaded. The demand and supply in Queensland of certain area, they built so many, and also what they did back then, they started converting their old homes into the SDA compliance homes.
Sure.
Because there is a provision, you can do it. Funding is less though, you can do it. However, in Queensland, they did so much. And when the new houses start coming in, people start moving out from those homes and they start moving to new property because they had more facility, new design, and that's the thing people need to understand, consider. However, in Victoria, we haven't seen this. No, not many people, and not possibly recommended to convert your old home into the SDA property.
Yeah.
Because then possibly you will be not compliant. That house will be not compliant with the new compliance rule since 2022 has changed so much.
And you make a very important point there, Ish, that ultimately because there is no lease, that is a risk in itself. As new houses come in place, if you are not maintaining your house well, as a house provider to a disabled person, and if there are other people who bring in brand new product out there, it's in the best interest of the participant to jump houses, right? Because, naturally they are paying the same amount of money, or the government is paying the same amount of money. And so why would they choose to live in a mediocre home or a tight home or a home where, it's not pleasant to live in, for example.
Correct.
So, and so that maturity of the market is definitely there. But I'm going to play a devil's advocate here for, maybe 2 minutes, right? And so, my biggest issue with, the media hype in relation to NDIS is that the media quotes that 18% of, Australian population is disabled right now. Ridiculous number of 18%. That basically...
4.3 million.
Yeah. And so that basically says that 1 in every 5 Australian is disabled. Okay. And so my natural thinking is, yes, that number, could be right. But, these boundaries of mental illness and these boundaries of disability have been blurred out completely. What is a disabled person in today's time is different to what a disabled person was when this policy was first announced in 2016, yes. Right?
Yes.
So it's a typical example of, what we call it, or people have been calling it, as an over-medicalization of, normal household problems, right? So, the whole idea and then of, having an NDIS or NDIA was basically, people... to support people who are truly, truly disabled. You hear people who are, losing confidence in today's time, or opting out of work and finding it too difficult, or even like in some cases, I'm going to talk a bit more extreme, drug addictions,
Correct.
Which would have been given a completely different, medical description before. All of them are now, classified as disabled, right?
Yeah,
and so this is an attraction of a lavish lifestyle. That's how I would say. And probably, people are going to tarnish my reputation for me saying this. But, naturally, that's what's happening, right? From an SDA provider.
It is. And this is unfortunate in this market, and that's very fine line, right? People coming from the drug addict, and then they're getting proven by their doctors that become disabled, and they're falling into that luxury lifestyle, right? And as you said, this is very fine line where the system get abused by certain people or community, I would say, and that's where the things goes dirty. Yes. But again, and that's what we are trying to avoid. We are together coming and trying to help that community. Actually, they need properties, they need home, they need to get out from those disability share homes and all the places, so we can provide the best possible services.
Definitely.
And we don't want to entertain those people who have that sort of mental thought that yes. I can claim the disability, I can take the luxury life.
Yeah.
No, we're not providing, we're not helping. We're dealing directly with the hospital people.
Definitely.
We're dealing directly with the people actually the need. They've already got the plans approved for their funding because they are disabled. They need support.
I think the important thing here is that if you go back to the base case scenario of why NDIS was set up, right? NDIS was a promise to Australians made to support these special people, to ensure that they get the best life of their choosing, right?
Correct.
And so
Correct.
You look at these leakages, you look at these budget blowouts, it's because that these lines are blurred. It's because of this definition of a disabled person is now so loose, and, people who are taking advantage, and actually it's the truly disabled people who is being disadvantaged out of all of these, equations. And so it's very, very important to understand, what the whole idea and the niche is. And this segues us into more of a government funding, government backed. And we've talked about this before as well, that, while there is massive government funding attached to it, an average NDIS recipient in today's time gets about $55,000, which is double the age pension in today's time, right?
Correct.
And so the scheme is set up skewed towards the services. Yes, housing is a small part of it, but ultimately the scheme was set up to ensure that the disabled people, could be brought back into workforces, could provide a healthy lifestyle. Basically that's what the whole idea and the niche of NDIS properties was.
Correct. It's both ways. Like when this scheme came into the effect, it works both ways, because the government helping those people, then investors, because they're happy to pay the rental contribution.
Yeah.
But also investing coming to the market and building a home, you're actually helping government back as well. Because then government taking those participants that are living in the hospitals, they don't want them to be in hospital, right? They want them to get well soon and then, move to the house. They can live comfortably, right? Their own life.
Yes.
So we're helping each other, and that's where the entire scheme was introduced for.
Yes. And so, the point that I'm trying to make here is that, when you talk about government-backed schemes, as these leakages and blowouts and the pressure builds up, the government either limits the scheme or comes out of the scheme very quickly. And NRES is a typical example where they had the cutoff this time June, where all the properties of NRES properties would basically, roll off. It's not that, if it's an NRES property, it's going to stay there and they're not going to, allow new NRES properties. All they're saying is that those properties who are there, no more benefit attached to it. That's it. And so imagine if something of that extension happens to NDIS properties and all of these tenants that are sitting in there. You can't charge them the amount of money that you want to charge to these people. You can't charge them normal tenancies in place. And so, from my perspective, that's the biggest risk attached to the NDIS space. And people who are investing should not truly be only investing from a dollar perspective. They should think about the social enterprise element of this. And, the government's lens of, who the disabled person is, or tightening that definition could mean that, instead of one in every 5 Australians having access to this, NDIS schemes, it could be 1 in 20 or 1 in 10. And that's where the mature market would really disintegrate in some areas or some cases where there is, higher supply, lower demand.
Correct. Now, well said, Moxin. I totally agree with you.
Now, taking this forward, some of the further cons in relation to this, we've talked about the difficulty in resales. How logical or how true it is, while the best case scenario looks amazing, right? To robust clients or, to high physical support clients coming in, how realistic it is. Can you expect on day dot that, it would be there? Is it a natural sort of thinking that there would be some vacancies attached to this? And so you need to be prepared in relation to the risk and the managing the risk sides of some of these things?
Yes, you have to. Because as I mentioned earlier, let's say 2 different categories. One is robust, one is high physical support. If we're talking about the robust are mentally challenged people, they need to have, someone to take care of them, right? Sometimes they don't like to share any room or any place with anyone else. And sometimes it's a requirement for their health to live alone. They can't live with someone else because they could be vulnerable. For example, they are not, good to other people, for example, or because they're mentally challenged, right? So we can't expect them to behave like you and I because, they're mentally challenged. And that's why we are trying to give as much support as possible for them to live comfortably, right? Yeah. And that's what the funding coming for. So coming back to your question, no. In the best case scenario, you can assume and you can say, yes, if you have 2 participants in one property, you will be making that sort of a dollar value. But in worst case scenario, you might end up with only 1. And that could be majority of the cases. Don't get surprised. So, and that's the reason when I talk to investors, I say, always take the worst case scenario. What if all the participants we are looking at and you are talking to, they just, want to live by themselves, just alone, right? Yeah. So if you're giving 3-bedroom home for 1 participant, you're not expecting $100,000 from there, right?
Yes.
But yeah, in some scenario, what happens, if participants, they have only 1:1, means they only can live alone with a carer. No one else can live. In that case, government raised their funding a little bit higher than the normal what they project.
Sure.
So that could be a benefit for an investor. Yes, a little bit more funding.
Yeah,
may come towards that.
Sure.
However, always keep the lowest worst situation with you in robust.
Sure.
Now, when you talk about high physical, it's a bit different. Because high physical houses can accommodate other different type of disability as well.
Yeah.
For example, if you build 3-bedroom high physical and plus 1 carer, and you're expecting 3 high physical, 1 high physical gives you funding up to $53,000.
Sure.
Then you're talking about $159,000. That's a good case scenario.
Sure.
Talk about worst case. Let's say you have only 1 high physical, and then their funding is, let's say, $50,000. You got it.
Sure.
Now, what about the other 2? So in that case scenario, if you haven't, if you can't find any high physical with that high funding, then you can go and bring, let's say, improved livability or a fully accessible person, which is the lowest funding, and it still can accommodate. And if they're happy to share with the other person, most likely there will be, because mentally they're okay, right? Most of the time, they're understandable. The family, their family actually wants them to live with someone. Right.
So this is the high physical support.
High physical support. Recently, we just tenanted out 2 high physical support house in our west pocket, and that was the scenario. One person came in, and then another support coordinator came in with the participants. Say, hey, they actually want to live with someone. They don't want to live alone.
Sure.
So this could be a scenario. They don't want to live alone because they want to socialize with someone.
Sure.
They want to make a home and family there.
Sure.
So then in high physical, you have a little bit the different chances to mix it and have the rental income increase.
And so what you are saying is it's important to consider that, it's not always the best case scenario. The more realistic scenario is that you might have one high support person and maybe two improved livability, sort of clients, rather than having three high support person, which might look great on paper, but it's not really applicable. How easy it is to find some of these people when we are talking about high physical support or robust, out of, the 14% or the 18% disability that the media claims or the government claims, what is the percentage of the people there? Do you have any numbers in relation to that, Irsh?
It's hard to give the numbers, but it's not too hard to find participants at this stage because supply is really, really low. Participants are actually waiting. They're in the waiting list.
Sure.
So as soon as the house is coming, they are in the line already. We have, at this stage, my company, 𝐍𝐃𝐈𝐒 Property Solutions, partner up with the Select Home Living, which is a provider company. And what we do together is we take care of all the measurement, right? So if we're building in a home, then we already have in that consideration that we're going to start hunting for those people and finding and talking to the participants, talking to the SIL provider, talking to the support coordinators.
Sure.
So we know in advance that how many people and participants are still waiting, right? So people are at this stage are in the waiting list, to be honest. It's not hard to find. Maybe in future years, when the market gets in a saturation point, when the houses get flooded, which will happen eventually in 5 years' time.
Yes.
But at this stage, no, because we don't have that enough supply.
Yeah.
Nobody's struggling. Everyone getting the participants.
And majority of these houses, are they built in mature areas? Are they built in greenfield suburbs? Where do you see the demand and the supply coming through?
So when you think of demand and supply, the first thing first, what these people requirements are. Yeah. So the major requirement is it has to be close to a hospital and local amenities. So shopping center close by, hospitals close by. And if that is okay, if it's coming under that, then possibly you can build there. You can fill that house easily.
Sure.
Although closer to CBD has a higher demand than the further away. Right?
Sure.
So anywhere within 20-30 kilometers from the CBD, that's where the participants wants to live because they've been missing that lifestyle. They want to live closer to the city and their family.
Sure.
However, it doesn't mean the demand is not further down in the regional area or anywhere 40 or 50 kilometers away from the CBD.
Sure.
There is always demand. As I said, there is a demand map. You can always check there and talk to your provider beforehand, before you're thinking of investing in that particular area. They will tell you, hey, we have participants, because they're talking to the hospital, they're talking to the aged care people and the service care people. They know that how many people they are waiting and how many people required homes at this stage.
Awesome. Look, I am out of the questions, Rs. Thank you for coming on the podcast today. Any parting words, any last words in relation to the viewers and the listeners who are, tagged in, listening to you, relation to the podcast, relation to your business, where can people reach you? Where can people find you? Give them a bit of an indication there.
Sorry. 𝐼ZPropertysolutions.com.au is our website where you can find us easy. Social media, you can find me easy. But at the last, what I want to tell my investors that if you're looking to invest into the NDIS, make sure you do your own due diligence. Whatever we have discussed today here, based on the information provided by the government website, our own research, our own data, doesn't mean that you just rely on that and go ahead, invest based on the numbers we just discussed. But we discussed about the risk as well. So you had to be mindful. Now, to understand more and depth into it, we have the complete process and knowledge and the full of, backed up knowledgeable people at the back end of the company as well. Feel free to reach out to us. We will take you and we will guide you through a step by step, including the demand area, the land resource, the construction cost, constructions, and then participants after that completion of the home.
Perfect.
So, yeah.
Thank you very much. And to the listeners and the viewers, look, if you have an NDIS property, please do jump in the comments or in the sections below. Talk about, what problems have you seen? What issues have you faced? What sort of risks do you see together? And on top of what we've discussed today. And also the good news stories, right? People who've achieved, amazing out of NDIS properties and are making good returns.
Please feel free to share with us so we can implement more.
Definitely. Yeah. And yeah, if you have any questions, comments, concerns, feel free to reach me and my team. Thank you for listening to another episode of Help Me Buy today. Keep investing, keep smiling, stay safe. This is Moxin checking out. Adios.
Thank you. Bye-bye.